Now we have the highest inventory position ever in the GTA. 24,000 listings available for sale. This is unseen, but we see the average price point this year so far ticking up ever so slightly. But weird enough, the sales are coming down. How does this actually work? Watch my video to find out.
Live behind decisions I chose. Peaks feel good and the valleys get low. Chains for the tires in the rain, hail, snow. It's like this everywhere that I go, everywhere that I go.
Everybody, it's Hussein Kabani, your favorite broker, and we are middle of June 2024, and we're back with another market update. We're gonna basically be focused more on what's kind of happened year to date so far, and we're gonna break it out into a couple of different categories. So we're gonna be talking about the average selling price, we're gonna be looking at sales, and we're gonna be looking at the elephant in the room, which is inventory. So let's start with something that is a little bit positive, I guess, somewhat, which is basically gonna be the average price. Now, when I look at the average price from last May 2023 to May 2024, we're down a bit. On average, we're down about $29,000, which is about 2.4% decrease from last year on average. But the peak pricing that we had in the GTA was February 2022. And from February 2022 to May 2024, we're actually down in dollar value about $164,000 on average selling price, which is basically 12.3%. Okay, so for us to get back to our peak on average selling price, we need to go up about 12.3%. Now, this is all bad news so far, but I said there was good news. So the best news so far over here right now is that this year so far, we have been inching up higher and higher in terms of our average selling price. And I'm gonna rhyme them out for you guys very quickly. I don't wanna get it wrong, so I'm gonna look on the screen here and we'll put up the numbers for you. But basically, if we look at January to February, we're up about 8.3%, February to March, up 1%. From March to April, we're up about 3.1%. And from April to May, we're up almost 1%. That's where we are in kind of average price points. Now, the question I always get after saying something like this is, where's the pricing gonna go from here? And that's all gonna be really kind of tying into what the sales and the inventory looks like. The average price is going up. How much is it gonna go up, or is it gonna come back down, or is it gonna keep kind of steady? That's still something to be seen. And the next two components are something that is gonna help us kind of identify where we think it's gonna go. So in terms of sales, we are actually dropping down in terms of sales. Like last year wasn't a really big sales number for overall GTA, but we're actually trailing behind that. So if I look at our year-to-date numbers from last year to this year so far, up until from January 1st to say June 12th, if I compare it from last year to this year, we're down about 2,000 sales so far. And now if I look at even May 1st to May 12th, we basically had, this last year, we had about 2541 sales. And if we look at June 1st to June 12th, we had about 2330 sales. So we're already down in the number of sales compared to last month. But if we look at even last year in June, we're actually down quite a bit more. So this year, like I said, June 1st to June 12th, we were about 2330 sales. And then if I look at last year, the same time frame, we're almost at 2,900 sales. So like north of 500 sales more is what we're missing compared to even last year. Year to date, about 2,000. Even this month, we're down about north of 500. And even compared to last month, we're still down. And that factors in having the rate decrease from Bank of Canada by 0.25%. So our sales are still kind of down. We did have a slight lift, I would say, on daily sales after the rate decrease happened, and it happened almost right away. So it leads me to believe that, hey, was that really because of the rate change, or is that something that was just gonna end up happening anyways? Because it's not like, to me anyways, you know, being 15 days into the month so far, it doesn't seem like it was a very strong thing. And why? Because everyone was anticipating that when the rates go down, that the market was gonna start to pick up. So why didn't that happen? Well, it has a lot to do with our inventory as well. Because when I was talking to people that were possibly looking to buy, their feedback to me is that, hey, we're gonna wait until interest rates come down for us to buy. Even when I was talking to sellers, they were telling me that, hey, we're gonna wait until the interest rates comes down, then we're gonna put our house on the market because we'll probably get a better price. But this is something that we haven't seen, at least in a very long time, that I haven't noticed, is that we're seeing two things happen at the same time. We saw a little bit of sales increase, but we're also seeing a little bit of the inventory increase at the same time. So even when this interest rate decrease happened, and the next part we're gonna get to is inventory, because we're carrying so much inventory, it doesn't seem like anything's happening. Now, since we're starting to talk about inventory, I would say this. Yesterday was June 17th. On June 17th is the first day that I have logged 24,000 listings available for sale in the GTA. That's a lot. Like, I have never seen 24,000 listings available for sale in the GTA ever. Like, the highest point that we've ever had, and I'm gonna just check my notes to be sure here, May 2013, we had 21,598 units available for sale. That was the highest inventory available for sale. Like I said, today we have 24,000 listings available for sale, and our sales are not there. See, even May 2013, when we had 21,600 listings available for sale, that month we had almost 9,600 sales, and we're not anywhere near those amount of sales. Let me summarize everything that I've told you guys in these 3 components right now. So basically, we're seeing that our average price point is going up slightly. It's not much. But this is the type of price increases that I actually like. I hate it when prices go up 7, 10, 12%. It just doesn't make any logical sense, especially when you compare it back to what's actually happening in our market. Like, has our average household income gone up that much? What has actually changed in our economy to support this price point going up? So when we don't see the support of the price point going up, I don't want to see it going above that rate, because we know we're starting to get into dangerous territory. Right now, the rate of increase that I've seen, I kind of like it. But it also is kind of working in a negative way as well, where we've seen like sales are slowing down and we're seeing increased amount of inventory. Where do we go from all of this data? It's really hard to tell, guys. Like, I think maybe a few years ago, I would tell you, hey, like, we could reasonably estimate what's gonna kind of happen over the next year. Maybe last year I would have told you that, hey, we could reasonably tell what's gonna happen quarter by quarter. Honestly, I can't even tell you that anymore. Like, I'm not sure. It is in June, if they actually change the rate instead of 0.25% to by 0.5%, then I think for some reason, psychologically, people would have saw that as a huge decrease, and I think that probably would have stimulated the market. I also think that the Bank of Canada is avoiding trying to stimulate the real estate market at the same time, because they don't want people to go crazy on this thing. I think that's the last thing that they want, is the prices to kind of go overboard again. And if you think about it, yeah, all the metrics made sense for them to bring the interest rate down, but it's kind of what we thought was going to happen anyways, is that they're not going to do it in the spring market. Even though it wasn't a really stellar spring market, they really didn't lower the interest rate in the spring market. They did it right as you're exiting the spring market. So very strategic of them. Now that I see that the sales are kind of down so far this month, kind of halfway through the month, I think that this might give them a little bit more of an indication of lowering the interest rate again in July. I know I'm going to get some pushback of that. That's fine. It's just my opinion based on where I see the sales. But hey, if we look at the sales in June 25th or June 28th, and we see that the sales are, somehow peaking at 8,000 listings or something like that, then I might have a different tone. But if we kind of stay kind of tracking the same way that we are right now for around like 6,000 sales or like 5,500 sales, then I think that's going to warrant them to reduce the rate a little bit. Of course, it's not all tied to real estate sales, but I think that is something that's kind of affecting the rate for sure. I just want to focus a little bit with this market update on the inventory. So where we are at with inventory, 24,000 listings is very, very, very high. So with this much inventory and the sales not being there, but yet we're seeing a little bit of a price increase, I can't imagine that if this is the way that we're going to go, we're going to continue to see that price increase even happen at even that 1% or 2% when we're starting to see inventory outweigh the number of sales that are happening. Because what's actually happening here, guys, right now, we're actually just building up inventory. And no matter which way you want to splice this thing, it is a supply and demand at the end of the day. So the thing is that obviously when our inventory is getting high and our demand is not there, there is going to be a downward pressure on price. I'm just not sure that if in July, if they lowered the interest rate by another quarter point, that if for some reason this is going to spark something with people and they're all of a sudden going to get on the market. I also believe with the conversations that I've been having with people that there are going to be more listings coming to the market. And who are the people that are going to be bringing these listings to the market, okay? So it is people that I find that have committed themselves to something where they've now experienced a completely different scenario. So let's focus in on these investors, okay? Or let me call it what it is, wannabe investors. When the market was really going well, everyone thought they were genius. They thought they were like investor guru level, okay? Which is BS. I just want to call it, I almost hesitated to say that, but it is true. Like just because, you saw the house price go up like 90 grand or $150,000 or whatever else like that, it's nothing you did. You just were happen to be in the right spot at the right time. It's not your smartness that got you to doing that. But guess what? What happens? People all jump on the bandwagon. Even now, last weekend, I was meeting with a client in the New Seton area, and they're like, "Oh, did you see that lineup at the new sales center? I think you guys are crazy, to be honest with you, because a lot of those sales center prices, I've looked at them and I compare it back to resale, and just for me, it makes almost no logical reason unless you're like super committed to buying that floor plan and you're okay paying $50,000 to $100,000 for a townhouse more than what you're actually getting in terms of resale right now. It doesn't make any sense to me. It might make sense to you, but right now with the investors, I think these guys are kind of coming back to the market right now. When these guys bought a few years ago, the flavor was completely different. So what was happening at that time? Interest rates were super low. So when you're calculating your mortgage payment when you close, you're like, okay, it's gonna cost me like $2,400 to run this thing, $500 for property tax. I'm gonna be at $29, a little bit of insurance. I'm gonna be at $3,000. Rent is $3,500 right now. So perfect, I'm gonna be $500 positive cash flow, great. Even some people made these moves based on saying, hey, I'm gonna be basically close to break even. Even I bought a townhouse in New Seton, and I was basically saying, okay, I'm gonna be up $300 every month. It's definitely not the case. I'm telling you guys the truth. I'm like negative about $1,200 a month into that place right now. So even the people that were buying these things and thought they were gonna be positive cash flow on it or even a break-even position, they're really not because of the interest rate that they had to close at. And the rental market had changed at the same time. So their expectations were completely wrong. But what these people are doing is there's a $24,000 HST tax rebate as an investor. So I'm gonna quickly tell you this, we've mentioned this in our videos before, but just very quickly, in Ontario, there is HST applicable to new home sales, but you don't see that if you're gonna be personally occupying that space, because that builder is gonna make you sign a note that says, I'm personally occupying it. They're gonna claim the rebate directly from the government to themselves. Now, if you tell them it's an investment property, they're gonna make you pay that $24,000 up front. How you get that money back is that you rent out the property, you file it with using a form, maybe 6 to 8 weeks later, something like that, you get almost your whole $24,000 back. People are closing these properties somehow if they can. They're renting them out for 1 year, they're getting their $24,000 back in that HST rebate, and then they're going and selling these properties. The problem with doing that, especially in these new subdivisions, is that a lot of people invested in here as investment properties, right? And there's a ton of these properties that are coming to the market, and I suspect will be coming to the market, which I think is obviously gonna flood it if our sales don't start to pick up. So these guys are the ones that are holding on and trying to sell them in a panic afterwards, after their year passes. Some people, unfortunately, can't even make it to the point of where they need to close on the properties and get desperate enough that they need to sell them even in advance. Or in some cases, I've been talking to some local real estate lawyers, which has been an awesome thing I've been doing. Some really cool law firm offices around Pickering, and they've been telling me that they're seeing people walk away from these deals. They can't close, they can't get a private lender, they can't get a second mortgage, they can't afford to execute the strategy that they had in terms of closing. So I think these are the listings that are coming up. I've seen a few more bank sales happen. Where's this all gonna go, guys? Again, it's very, very, very hard to tell of where these guys are gonna go. Eventually, if they're stuck in a position, they have a little bit of equity in there, the smartest thing that they can do, I think, is basically dump it as fast as they possibly can. Now, coming around to talking about like, what can you do? Please look at your numbers. If you guys have a mortgage renewal coming up, we're gonna be talking with Vern about this soon too, but if you have a mortgage renewal coming up, if you're closing on a property, just look at your freaking numbers properly, calculate it out, calculate worst case situation, and say to yourself, like, actually, can I hold on to this? I'm leveraging possibly my principal residence to get the money out to close on this property, and I'm gonna hold on to it. Does it actually make sense when we're basically having almost a flat price growth? Sales are down, inventory is picking up. Use your head, be smart. Like, I get that you have a bunch of money tied up onto these things, but can you actually afford to hold it? How long can you afford to hold it? Now, I don't want to say everything's doom and gloom, and I may be wrong about this, okay? And I've already had a past client that's got upset with me because I won't send him any investment kind of things, because I'll be honest with you guys right now, at this point right now, personally, I don't believe in it. I do well in my business. If you guys been following me, I think you guys get that idea, but actually I've done better in my investment in real estate versus actually operating in my business. And I'm not investing in anything anymore, at least not in Canada at this point. I haven't actually pulled the trigger and invested anywhere else right now, but we're getting closer and closer to, because every time we go back and reevaluate the opportunities, opportunities, it just seems like a better option of investing in other spots other than Canada. So like I was saying, I have a past client that got pretty pissed off with me because I wasn't sending him anything because I don't believe in it. I don't believe that you're gonna have the same type of appreciation that we've seen in the past 10 years based on the inventory that's there, based on the interest rate environment that we are in. So I think it's a little bit tough. Now, like I said, I could be wrong. If you think that things are gonna turn around in 5 years, 10 years, and you're comfortable holding onto this property, maybe you're putting down enough money that you're not gonna have a negative every month, putting 40, 50, 60% down on a property, so you're not gonna have a negative, or you're comfortable swallowing this negative $1,200, $1,300, $1,500 a month, and you think things are gonna get better, then please be my guest. I'll even help you with it, but you need to acknowledge that first, right? That you think that it's gonna turn around. Because I can't consciously with my mind say, hey, this is an awesome investment, you're gonna make tons of money on this thing. I don't think so. Now, that leads me to, hey, just us average people in the market, what does this mean for us that are just trying to live in a home and not try to capitalize it as an investment vehicle? What this means is that there is actually an opportunity out there for you guys, okay? I think people that are entering the market that have a good feeling about the market and the long-term position and you're a first-time home buyer, I think honestly that there is some good opportunities for you. I'm not saying buy anything, evaluate it, but I think that there are some good opportunities that are coming up for you guys and that exist right now. The other thing I really believe in, and I have been saying this, is move-up buyers. Listen, you have a great job, your credit is good, you're comfortable with your job, you're comfortable with the location that you want to live in, and you're gonna live here. That's your bottom line. You're not going anywhere. You're gonna live here. It's a perfect opportunity for you, but please do not make the mistake of not selling your house first and then going out and committing to something thinking that you're gonna be able to close in 60 days. It's a very stressful situation if you put yourself there. I think right now that there's a ton of inventory out there, like I've been saying this whole time. I think that if you're considering this, it could be a great opportunity for you, but I think that you need to get your property on the market first, have a great presentation, and be very close, if not sold, with your property before you go and commit to something else. So I think that there's a huge opportunity. If you're in that category, guys, right now, I would love to talk to some of you guys, even just to kind of have an open discussion. Don't even have to use me, I don't care. But like if you're a first-time home buyer, or if you're thinking about moving up in your real estate, I think you should get a hold of me. Let's have this conversation because I think it's a good opportunity for you guys. Now, it all depends on where you guys think that this is gonna go. This is only my opinion. I'm sure there's tens of thousands of realtors posting their own opinion about it. Check them out, evaluate it for yourself. The whole name of this thing is that, you know, we hear that saying that says knowledge is power, but I think that's BS. I think that power is you collecting knowledge and being able to formulate it for how it works for you and being able to execute on it. So don't take my, whatever I'm telling you word for word. I'm not out here, because I get these comments and it pisses me off sometimes in my YouTube, oh, another slimy salesperson. I don't care. Like at the end of the day, I'm just trying to provide you guys with whatever I see. And remember one thing when I tell you guys this, not just get Kabani, get sold, but like I invest in the real estate market. Like I'm actually an investor in the market, and I'm not investing in the market right now. I'm gonna sit still unless I see a very clear opportunity, which I don't right now. I'm gonna sit still and see what ends up happening. So I hope you guys enjoyed this video. I hope I come across pretty straightforward. And if you enjoyed this content, share it with your friends, share it with your family, like this post so more people can end up seeing it. Importantly, guys, subscribe, because I think my content is better than anyone else's. So subscribe to it so you don't miss it. As you guys can tell, with all of the passion that's oozing out of me recording this thing, I love talking about real estate. My friends, clients, wife, family, they're all sick and tired of me talking about real estate. I'm looking for new blood to talk to real estate about. And if I haven't called you yet and you want to talk, just call me. Otherwise, I have a link to my Calendly below. Book an appointment, 15, 20-minute phone call. I'd love to bring you guys up to speed. Love to hear what your thoughts are about the market, what you might be trying to do. Again, you don't have to use me. You can run it by me, what you're thinking about. Maybe you're not even thinking about doing anything for 6 months. Book the appointment, let's have a quick chat, and I'd love to kind of hear what you're doing and give you my 2 cents about it. Until next time, guys, remember one thing, get Kabani, get sold.
Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold. Sell it, sell it, sell it, sell it, sold.